two separate topics at the request of the conference organizers. First, I would like to give a brief overview of macroeconomic developments, the outlook, and some emerging concerns for Vietnam. Second, I will summarize the structure, progress in reforms, challenges that lie ahead, and thoughts for further reform of the financial sector. So those are the two topics that I'd like to cover during my brief remarks today. So first let me touch on macroeconomic developments and the outlook. So I'll cover a little bit of history here because I think it's important for context. So over the past 5 years, Vietnam has stabilized the macroeconomic situation. You can see in this first chart on the left that inflation has come down from over 20% in 2011 to low single digits today. And this has been achieved through concerted policy action on the part of the central bank and other organizations. And it's been aided more recently by steady decline in commodity prices, which have remained low now for a number of years. The second thing you'll see here is that in recent years there have been kind of periodic jumps in the exchange rate, in particular depreciations. Early in 2016, the central bank, in fact on the 1st of January 2016, the central bank introduced the new exchange rate mechanism, which basically allows for more flexibility. And this mechanism is allowing policymakers to better gauge and react to market developments, particularly in the foreign exchange market. You can also see here that the current account balance has improved a lot in the last several years, and actually I'll come back to the 2016 number in a minute. But in essence, the economy's export performance has improved markedly as integration has deepened and FDI has flowed in. And this has been reflected in a sustained return to current account surpluses. Let me just touch on the 2016 number here. The number here is from our most recent World Economic Outlook, but we're about to revise that actually based on developments in the last several months. So in fact now for 2016 also we expect a current account surplus on the order of around 4% of GDP. But I would comment that this improvement in the current account balance this year has come, in fact, mainly from a decline in imports, while export growth has remained decent, but it hasn't been growing strongly. Although I would say, compared to other countries in the region, Vietnam is the one country really in Southeast Asia and in Asia more broadly that has not suffered from a decline in exports in the last couple of years. Growth has either been positive or even quite strong. You can also see here that in the last several years, international reserves recovered steadily from 2012 into 2014. This reflects a stronger export performance, FDI inflows, remittances, which are still a big story in the Vietnamese economy. And this year they've been rebuilt again to 2014 levels. And looking forward, given that a more flexible exchange rate regime has been introduced, that regime should actually help support reserves going forward. So now let me just touch on interest rates. You can see also here that as inflation has come down, interest rates have declined. And the interbank overnight rate has generally been kept near the central bank's repo rate in the last couple of years. Although after April of this year, that rate, as you can see from the chart, has gone very low. The interbank rate has been down in the range of 0.5 to 1.5% for quite some time. And this in essence reflects the large interventions of the central bank to purchase foreign exchange, but not sterilizing those interventions. And so there's a lot of liquidity that's been left in the system. You can also see here that as macro stabilization has been achieved over the past several years, the need for SVB refinancing of the banking system has fallen quite a bit. That's the blue line in the right chart. So the SVB has been able to step out of the system as a provider of liquidity, as the liquidity in the system itself has recovered, and as the banking system has become healthier again. Here, I'd just like to touch on some indicators, or an indicator of, or two of domestic demand. So here you can see that real retail sales have settled into a healthy range of growth of around 6 to 10% over the past several years. And this reflects a return of domestic demand. You also see that the overall industrial production index has been showing positive growth of around 10 to 20% over the past couple of years. And this has eased a little bit this year as mining has declined quite a bit. And that really reflects the fact that oil production was pushed up last year but has tapered off this year. So that kind of covers some of the major developments over the past 4 or 5 years. In those charts, you can see that the country has moved from what was quite a volatile situation in 2010-11, including quite significant stresses on the banking system at that time, to a situation of essentially macroeconomic stability. So let me now turn here to the outlook briefly. So for the outlook this year and in 2017, the IMF sees growth at around 6%, a little bit over 6% both this year and next year. And this reflects the weak global environment. But in our estimation, it also reflects kind of potential growth in Vietnam's economy in the absence of kind of very ambitious reforms in the financial sector and the SOE sector. There's a lot of inefficient use of resources, let's put it that way, in the economy, and that while it serves other purposes, it does tend to hold growth down a bit. We also see that inflation will remain subdued in the coming years, this year and next year. This again reflects global developments. Vietnam has tended to import inflation historically. There's not really any inflation to import into any country these days. So even in the presence of very substantial increases in administered fees for education and health, inflation in Vietnam is likely to remain in the range of 4% in the next couple of years. And even that is an increase compared to last year. On the fiscal side, which I'll come back to later when I talk about some macroeconomic concerns, in the absence of policy measures, fiscal deficits will remain high, and this will keep upward pressure on debt, in particular publicly guaranteed debt. Again, the current account balance numbers here, I would ask you kind of to disregard. These are from the World Economic Outlook that was just released. But now, as I said, given recent developments this year and what is now clearly a pickup in the rate of growth of exports looking forward, which reflects FDI from the past and the payoff from that FDI, if you want to look at it that way, we probably will revise upward our current account surplus estimates to around 4% of GDP both this year and next year. So now let me just touch briefly on a couple of macroeconomic concerns, and then I'll turn to the financial sector. So a couple of concerns. The first one here is that growth has slowed. As I said earlier, this is due to the external environment, also this year in Vietnam, to domestic shocks to agriculture, which has taken a heavy hit from drought, over the past couple of years. And now drought has turned to flooding in many areas, so agriculture has not performed well. So that domestic shock is holding growth down, as well as the global environment, and again, as I mentioned, kind of potential growth is anyway in the range of 6 to 6.5%. What we do see that the IMF raised as a kind of issue or concern in our Article 4 consultation this year is that credit growth is picking up again very quickly in Vietnam. You can see how high it was 7, 8 years ago. It eased off a lot, but now it's picking up, and I think what we focus on here is the kind of credit intensity of growth. So this year, for example, real credit is probably going to grow somewhere in the range of 17 to 18%, while real GDP growth will be 6%. So this is a kind of high ratio of credit to growth. And if you look at international numbers, this kind of ratio starts to raise the kind of, let's say, yellow flag about concerns about financial stability looking forward. Not today, but looking forward. There's also a question here, which I'll touch on a bit more later, of, what is the quality of all this credit growth that's going into the economy today, and what does that imply about future non-performing loan ratios? Then let me touch on the fiscal side. So as I mentioned earlier, fiscal deficits won't come down without some policy measures. During this term of the National Assembly, some policy measures are being considered, I guess, but it's not clear whether policy changes will come about. But they've been high now for 5 years, fiscal deficits, as you can see it from the chart on the left. And the chart on the right just shows you that public debt has risen accordingly. So public and publicly guaranteed debt have risen, in the past, say 5 years, from 48 to about 62% of GDP is projected for the end of this year. So this is quite a rapid increase in public debt and reflects the underlying fiscal imbalance. So those are kind of the things I wanted to touch on in the macro area, giving you a flavor of how stabilization has been achieved, but then kind of also highlighting a few concerns as we look forward. So let me now turn to the banking sector. So what we have in Vietnam is, as Deputy Governor Kim Anh mentioned, we have a bank-dominated system, heavy on the banks, and also, I would say, crowded for a country of Vietnam's size and economy of this size. So this chart just shows the breakdown of all the major financial institutions. Basically have 95 banks in Vietnam, plus these 28 financial leasing companies. So for an economy this size, that's a lot of banks. And it also remains dominated by the state-owned commercial banks. So notwithstanding, as was mentioned earlier, the fact that the system has been opened up to private sector participation for a long time, still the large state-owned commercial banks account for, you can say roughly half of the lending and the financial system. Or if you look at total assets, same story. And it's quite interesting to me. I came to Vietnam first time in 1994, just when I joined the IMF. And at that time, these ratios were a little higher for the state-owned commercial banks, but I think the one thing for me is it hasn't fallen much over this 22, 23-year period since that time. So the system has grown as a whole, but these banks have also grown, the large state banks. So first I'd like to touch on what progress has been made in key areas over the past 5 years. So there's been a concerted effort to identify weak banks and take initial measures to address it, including through some mergers to combine weaker banks with stronger banks, and even in some cases takeover by the central bank. There's been a clear recognition of the challenge posed by non-performing loans, and a clear direction to banks to deal with this problem. So this has been a big step in the last 5 years. As the chart showed earlier, central bank liquidity has not had to play a big role in the past few years, so improved liquidity conditions have been achieved, and these have helped avoid systemic risk. The central bank and the regulators, the government, have also been quite firm on the issue of cross-shareholding and related party lending in the banking system to get at this problem. It's not that it's completely resolved, but it certainly has received a lot of attention and progress has been made there. And as the Deputy Governor mentioned, the legal framework for financial institutions has been significantly improved and moved towards a more market-based one. Some other things that have been achieved in recent years, there's been a phasing out of explicit loan classification forbearance on new loans. Even beyond that, there's been a lot of attention paid to properly classifying old loans as part of the exercise of identifying and beginning to resolve non-performing loans. So this has been a big step forward. There have been restrictions placed on dividend payments by weak banks, which is the right policy to pursue. Until those banks are healthy, they should, of course, use their resources for rebuilding their financial strength. Supervision has been strengthened in order to deal with certain risks in the system. There's been a gradual tightening of macroprudential policies. For instance, I think from the beginning of next year, there will be a higher risk weight applied to lending into the real estate sector. There have been other macroprudential policies pursued by the central bank. And Basel II is being piloted for 10 large banks in Vietnam in order to try to, well, one, see how that implementation could proceed for the whole system and also strengthen those banks. Now let me just turn to some challenges that still lie ahead in the financial system. So the legacy of impaired loans still poses a challenge. As I said, they've been identified and there's been a start to addressing them, but many NPLs remain in the system, and I'll come back to kind of our estimates of that in a minute. Also, as I mentioned earlier, there's been this recent rebound of credit growth, which is kind of raising some flags as far as the IMF is concerned. So here, if you look, this is something coming out of our Article 4 report, which is available on the IMF website. So this is from this year's Article 4 consultation. If you look at, this is a cross-country plot of return on assets and return on equity in the financial sector. And what you can see is that Vietnam banking sector profitability remains weak, and this essentially reflects a high level of impaired loans. So if you add up all the loans that's still on the books of banks and those that have been shifted to the VAMC, which is still the responsibility of banks to provision for or to otherwise resolve. And if you do kind of a cross-country comparison, just a simple plot like this, this would indicate that the real NPL ratio in Vietnam is somewhere in the range of, say, 12 to 18%. So this is an exercise we did, and in our discussions with the authorities, there was kind of an acknowledgement that So this is an ongoing discussion in the government and in the financial system. But anyway, the fundamental point is that NPLs are in the system and they should be resolved to restore fully the health of the system. So some of the challenges in achieving that, the VAMC's current operation, it kind of lacks resolution incentives. There are certain legal constraints that make it difficult to resolve NPLs. There has been modest progress in restructuring and selling NPLs, and actually that has improved in the last year quite substantially as the real estate prices have firmed, underlying collateral has increased in value. So for some banks there's a shortage of capital that needs to be addressed. The current kind of approach of recapitalizing some banks essentially through retained earnings, which are then used to provision and write off bad debt, will take a long time. And that's kind of acknowledged in the structure of VAMC, which allows 5 to 10 years for NPL resolution. From our perspective, one challenge with that approach is that it requires many years of uninterrupted growth. And nothing that should negatively impact the underlying collateral. There remain limits on foreign ownership, and there's limited use of international financial reporting standards in banks. This is another area of challenge. And maybe also related to that, you know, when you sell a bank, you don't have to sell it to an outsider. You can sell it to an insider, I mean, inside the country, an investor. But for that to happen, you need big institutional investors to take up shares. And in Vietnam, there are no large domestic institutional investors, such as really big pension funds. There are some, but they're not many, and they're not all that big. So selling domestically is also a challenge if you're talking about big banks. As I spoke about earlier, there's been a recent credit rebound. Others referred to the ratio of credit to GDP being about 112% at the end of last year. Given the credit growth this year, the pace of credit growth, this ratio will rise to 120% probably by the end of 2016. The other thing I would comment on here, if you look at the chart on the right, Vietnam's ratio of credit to GDP is very high by Asian standards. Vietnam is the red line. Malaysia and Thailand are the other lines up there. But Malaysia and Thailand have much deeper and more well-developed financial sectors. So if you look at Indonesia and Philippines, you can see their credit to GDP ratios are much lower, even though even their financial sectors are somewhat more developed. So this is, again, for us, this is a bit of a yellow flag, that the credit to GDP ratio has risen, again, to a very high level in an economy at this stage of development. So as you think later about your topics you discuss in the afternoon, this kind of gives some background. I don't think I'll spend much time on this chart because this is kind of the same point. So, you know, as credit to GDP rises, inflation risks start to rise, although in the current global environment, maybe that's not such a risk in the near term. This percentage change of credit to GDP on an annual basis, once it moves above 7%, it also internationally becomes a kind of signal of financial stability risks. And for Vietnam, recently that has moved again above that ratio. So let me now touch on some thoughts looking forward, and then I'll conclude. So the government, I know, is currently working on the bank restructuring plan for 2016 to 2020. I believe it will be discussed in the National Assembly in the next few weeks. And certainly there's a need to push for further with banking sector restructuring. And we would even say that should include closing or liquidating insolvent or non-viable banks. Another thing, as I mentioned, NPL resolution has accelerated in the last year as asset prices for the collateral have improved. But there are other measures that can be taken, such as in the legal framework, to further accelerate that process. I think a key point looking forward is to prevent the emergence of new NPLs. So there's a large stock from the past, and the country should be very careful not to generate new NPLs. And again, as I mentioned, given the inefficiency of some of the credit use in this economy, with a high credit growth rate, that risk does exist. We would advocate, as we did in our Article 4 discussions and report, for recapitalizing banks by the existing shareholders for those banks that need it, and including through the use of budget resources for state-owned commercial banks combined with management restructuring. The AMC I've already mentioned. The other points here are fairly general. Let me touch on the point on SMEs. You hear a lot in Vietnam about the lack of access to finance for smaller companies. And part of this results from the inefficient allocation of financial resources within the banking system, much of which, as I said, is directed towards state-owned enterprises or otherwise favored firms. So this is an area that, in order to help drive growth going forward, improving the access of SMEs to finance for their growth, many of which may start out as startups, is an important point for Vietnam. And then kind of mirroring that, continuing with the reform of SOEs, including the equitization, as the government is now proposing to speed up, or is actually speeding up, will help make the underlying economy more efficient, which would mean that credit extended would also be used in more efficient ways and support more equitable and inclusive growth. So I've covered a lot in this 15 or 20 minutes I've spoken, but that's where I would like to conclude, just to leave you with those thoughts. So once again, I thank the Banking Academy for inviting me here today, and I look forward to this. Thank you.